Well, hello, traders and investors. My name is Roger Scott. I'm the head trader for Wealth Press, and welcome. Today is the 11th of January. It's officially, let's see here, it's officially the second week of the year. And I'll be quite honest with you. This is the week that things really begin moving. This is when funds begin coming back in and really moving the market, because a lot of hedge funds take holidays all the way till the 5th or 7th of January, or are slow to come back. They kind of want to see where the action goes. So as far as I'm concerned, this is going to be officially the real trading week of the year, or the first trading week of the year, where we're going to see a lot of volume. So let's talk about news. Let's talk about the calendar. Let's talk about what the futures are doing. And then I'll give you three stocks that I think are going to be going down. So today we're going to talk about three low-hanging fruits to the downside. And if you guys are long these stocks, you probably want to cut them out of your portfolio. And if you're neutral on these stocks, you may want to stay away from them. And if you're short these stocks or buying puts, then you're on the right track. So let's start with the news. And again, if you guys remember, my biggest fear about the first quarter of 2021 was not getting the vaccines fast enough while the COVID does damage. And that's where we're at right now. To give you some context before I get into the news. So what do I always say? Let's get into it right now. Global shares futures were mostly lower Monday. Let me show you some evidence of that. Look at that. The Dow's down 244 points about an hour and 15 minutes before the opening bell, as hopes for more U.S. economic aid were countered by fears over spreading damage from the pandemic. Remember what I told you? It's going to be a situation where, are we going to get the vaccine, or is the COVID going to come and cause fear, damage, and rampage? And it looks like the COVID is causing more rampage than the vaccines are helping at this time. Why? Because healthy people don't have access to the vaccine. And meanwhile, COVID is causing a havoc and causing much worse conditions than it did last March, April, and May, when the market actually cooled off. Traders are continuing to be cheered by prospects that the incoming administration will pump more aid into the economy. Yeah, but at what cost? A move that will help Asia and other export-driven nations. Absolutely. But the optimism is tempered by worries over the potential for further disruption on the political front before Biden takes office. Following last week's riots, I mean, we needed those like we needed Biden may also struggle to win support from his pledges of much more financial support from individuals and businesses, despite the Democrats' control of both houses. I'm not sure about that. I think he's going to get plenty of aid. Here is what I'm worried about. At the same time, the economic outlook is darkening. Labor Department said Friday employers cut jobs for the first time since April as the worsening pandemic led more businesses to shut down. Are you guys seeing a repeat of what we saw last March, April, and May? It was a much worse reading than the modest growth that the economists were expecting to see. Meanwhile, no COVID relief in sight for healthy people for another 3 months minimum. My folks are in their 70s. They celebrated their 51-year wedding anniversary last night. And I asked them, when are you guys getting the vaccine? They're like, at least a month, maybe 2. And these are people who really need it. What about the workforce? Such pressure is rising on economies around the world as the pandemic accelerates. Remember the example, the hypothetical I gave you, the James Bond example, how you have a madman at the wheel, he's about to press the button, and the nukes are about to be released, and here's James Bond running to save the day, and it's just a matter of what happens. That's where we're at right now, folks. I'm not kidding. The COVID is so bad, we need the vaccine available for everyday people now, not 3 months from now, because we're, again, going into the same type of conditions that we did last February, March, and April, and that's bad. In Japan, markets were closed for national holidays. There's a huge surge in COVID infections. Another new variant of the virus reportedly over the weekend hit. Third largest economy risks sinking further. What does he do? Declaration state of emergency for the Tokyo area, which kicked in Friday, focuses on asking restaurants to close at 8 p.m. Critics fear that's not enough. I believe that's not enough. I think as soon as Biden takes office, we're going to have a 90-day national lockdown. And that's going to be bad. But it is going to cause the stay-at-home stocks to, just like they did in March, April, and May of last year. Hopes are high for rollout of COVID vaccines, but the reports of new version of the virus are setting off new worries. As some experts believe more studies are needed. The bottom line is, folks, we're not in a good position right now. And I know a lot of analysts are saying, don't worry, it's coming, but it's not here. Meanwhile, unemployment rates are going havoc. Crude oil, on the other hand, is making some uptick. Frackers are actually able to buy crude oil and actually make some money on it because it's at $51 per barrel, which is actually on the way up. Although I would be very, very cautious with traditional energy right now in light of Biden's administration putting a ton of focus on renewable energy and lithium, which is what you need to to charge self-driving cars and renewable energy sources and so forth and so forth. So that is the news. Now, here's the calendar that we have. We're going to get a good idea of what the market's going to do beginning of this week. And I think volatility is going to increase. The biggest reports are going to be Friday. We got jobless claims, imports and exports on Thursday, but Friday is when the big numbers come out. I'm looking for the retail sales number. As far as I'm concerned, industrial production, retail sales are going to be and consumer sentiment, but that's going to go with retail sales. Consumer sentiment and retail sales are tied in. But that's going to give us a good indication of where we stand. So don't expect too much hints at the economy during the week till we get to Thursday and Friday. I'm really, really hoping, my fingers crossed, that the jobless claims report is going to be good. But look at this. We're right at the 4-week moving average. We're seeing almost 818 on average claims, 1,000 claims per week. That is not happiness, folks. That is not happiness. And again, keep your eye on the retail sales. We'll talk about it before Friday, but that's kind of what's happening on the market front in terms of sentiment. In terms of the overall market, I'm still seeing the Russell lead over the QQQ, which is down before the market opening a bit less than the Russell. But again, markets are lower overnight, as you could see here. We got the Dow down about 220, the NASDAQ down about 80. It looks like we're going to open lower. And I'm going to tell you something. Based on last week's data, especially end of week data, I'm not surprised one bit. I've been waiting for a breakdown, and I think we may be here. Now, I'm not talking about a major breakdown. I'm only talking about, let me just show you what I'm talking about. It's easier to show you than to tell you. If you look at the S&P, I think there's a really good chance we're going to hit the 50-day moving average, which is at the 3,600 level, and go to the 3,400 level, which is the twilight zone. Not sure if we're going to do it now, but based on momentum levels, we are, I mean, look at this. Higher price, lower momentum. That's a divergence, and that's a very strong indication that the market is going to sag. Another major indication that the market is going to sag is momentum levels, which I've been talking about nonstop. Look at the number of stocks trading above $2 that are trading above the 200-day moving average, 88%. 88%. And look at the 50-day moving average, 86%. This is all the stocks on the exchange. Let me just show you this so you could see what I'm talking about. This doesn't happen very often. Let me go to 10 years. You see that? You see that? Highest level in like 10, 11 years on a 50-day level. Now, if you look at the NASDAQ, let me show you this. That's telling us there's too many stocks trading above the 50. Look at this, 91% of stocks in the NASDAQ 100 are trading above the 200-day moving average. Just to show you that's not a very common scenario. Look at that. That's a 10-year chart. Look at 20-year chart. It doesn't go below 2007. Highest level since, look at that. Highest level since right here, since 2009. We're at the highest momentum level, folks, in 11 years. We have over 90% of stocks trading above the 200-day moving average. And 50-day, let's look at the 50-day line. Look at that. Here's the window, the danger window. Again, this is going back to 2007. This is March of 2007. This is now. Look at where we're at right now. So momentum levels are overbought. Fundamentals are not great. Markets are cooling off and are diverging. Folks, we're going to have a cool off. Not a permanent cool off, not a bear market, but markets are overdone, overstretched right now. So you got to be extra careful. Now, in light of that, let me give you some low-hanging fruits. Let me give you the 3 weakest stocks in the S&P 500. What can you do with this? Well, when the market cools off, guess what stocks go down the quickest? The weakest stocks. And which stocks hold on the best to strength? The strongest stocks. So if the market's gonna cool off, if we think that their momentum levels are overbought, markets are overbought, things are diverging, why not look at the 3 crappiest stocks in the S&P 500? Crappiest, weakest stock in the S&P 500 will most likely go down the most. Makes sense, right? Defensive companies, traditional defensive companies are not looking great, guys. Lockheed Martin. Remember, Democrats, traditional defense companies don't do well. Let's look at a chart. Let's look at hold on, let me just give you a good visual of this. That's the 200-day moving average. This is a daily chart. Let me show you a long-term chart. We haven't been able to go up since February. That's the peak February of last year when the market crashed. We've been sitting at the 200-day moving average, and now we're breaking lower. We just broke below the like at the 10th month low. Look at that. That's here. We are at the lowest level since we are at the lowest level in 8 months. This is an 8-month breakdown, and it looks like it's going to go lower. PRGO. Let's just show you what it does. You guys know what Lockheed Martin does. This is Prego is a pharmaceutical preparation medical company, healthcare, over-the-counter self-care wellness solutions. 5-year return 69%, 3-year return 51%, 1-year return 9%. This is a dog with fleas. It's breaking down. As you can see here, it's below the 200-day moving average. It's already almost near all-time lows, and I think the stock is going to go down to the bottom right here and break below. So I would be selling it right at this level and put a buy stop right here. Next one, energy stocks. Traditional energy stocks, not good. If you look at this stock, it peaked out right around 1120, and it's been breaking down and down. Now it's trading below the 200-day moving average. If you look long term, you'll see this stock is just breaking through a 8-month, 9-month low, just like Lockheed Martin did, and it looks like it's going to break down. If it does, it's at 70. It can go all the way down to 59. But again, I see it as a low-hanging fruit right here below 200-day moving average, below these levels. And as you could see here, this is the weakest sector. I did some liberties in picking out some of the weak ones for you. But as you could see here, Domino Energy right here, this is 500 stocks. This is from the weakest. Now we're looking at the strongest to the weakest. Now we're looking weakest to the strongest. PRGO, the weakest stock in the S&P 500, Lockheed Martin, and Domino. We looked at the bottom 1%. Also, I want you to notice something. Notice Kimberly-Clark, Northrop Grumman, and Lockheed Martin are all in this place. We're going to have to talk about that later, but that's a cyclical thing with Biden taking office, because you could see here, Lockheed Martin, what do? And we'll talk more about that. It's an industrial stock, guided missiles. Democrats are not that big on war. Let's look at NOC. Air Defense, global security company. They don't do well in Democrats. And last one, Kimberly-Clark. That's a paper company. I'm a little surprised this one's not doing well. But again, for now, focus on these 3 stocks I gave you: Lockheed Martin, PRGO, and Dominion. But I'll talk about some more weak ones like defense stocks, paper stocks, and so forth as the week continues. Most importantly, keep your eye on these numbers. Thursday, jobless claims, Friday, retail sales. Now, folks, before you go, I've got something big for you. We've all heard that buy and hold strategies are the surest way to make money in the stock market, but I'm here to tell you that it's just not true, at least from what I've seen. Look, the S&P on average over the last 20 years gives you about 6% return per year. That's really not much. In fact, one Wall Street insider revealed the secret to making triple-digit gains on stocks like Facebook, Apple. These are some big stocks in as little as 24 hours. What would you rather have, 6% per year or triple-digit gains per year per 24 hours? on big caps like Facebook and Apple, not on some dinky penny stocks. Stop waiting years for your investment to pay out when you can start enjoying your returns today. Today. Follow the link below. Learn how you can get started now. This is the surest way to make money in the stock market from what I've seen, in my opinion. Just my personal opinion. But again, you got to check this out. This is really, really cool. And most importantly, have a great day. Click the link below. Check this out. You guys are going to love it.